Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at ticker symbol SG. This is Sweetgreen. I've never actually seen what they do. I remember seeing them on CNBC and I thought they were like a buffet, a healthy buffet, like a sweet tomatoes. Salads? What? Okay, so they about us. Do they have a menu? I don't really uh our menu. Let's see what it is. Is it all salad based? Okay, there's some warm bowls. Okay. Okay. So it seems like a healthy it's not a buffet. It seems like just a healthy company that does bowls, um, salads. Ooh, I love this brand. Um, okay. There's no like Coca-Cola. Okay. So definitely seems like a healthier restaurant type company. It looks like we're gonna look at the bigger picture first before jumping into things. Whoa. Okay. They IPO'd around 55 bucks, went down to 650, and now it's back up to 22. We got a huge gap here. I would look for that to be filled. Um, they are not profitable. Gross margin is 7%. Some restaurant stocks and restaurants in general have very hard margins. Every $100 they put in, they get $7.26 back. Um, they have plenty of cash, so sales are considerably going. EPS rounding the bottom up and to the right, potentially. Um, yeah, they do have earnings later today. To the downside, I think we want to see this gap get filled first. So that's around $13, which is about a 50%, 50% trim. To the upside, however, um, let's go ahead and draw some lines. To the upside, $25. I think if this stock is going to move up, I think 25. If the stock is going to move down, I think we have all these different levels to be aware of. Okay. So you're asking yourself, why did I draw these lines? We can see it act at this line right here. The top one acted as support 1, 2, 3, 4, 5 times. Acted as resistance twice. This is a line we do that should be created and respected. Respected. The second line right here was acted as support, resistance, support several times over. Um, Again, to the downside, we're going to see $18 likely first. Then we want to see that gap around 15. So, and then around 11. And then this bottom line right here acted as support, resistance, support. So that's why I drew those lines. Let's go ahead and run my calculation to see what the potential price of the stock could be. This calculation, ooh, they're not profitable. I worked at a microcap company firm, and every 100 million in sales was equivalent to $1 stock price. Whoops. No, dang it. That's what I get for talking and typing. Okay, 2.5 billion market cap. minus 113,380,000 plus 584,040,000. Okay. And we're going to go ahead and include cash and debt. Let's just see what we got going on here. They do have, and this is USD, 257, so plus 257,230,000. Total debt, not that much, minus 271,440,000. Not bad. Okay. Total assets are 912 million. Total liabilities 429 million. So their assets dwarf liabilities 2 to 1. That is very fair. However, again, they spend 144 million to make 153 million. Margins are very slim. If we get hit with some type of health outbreak again, or this company has like the same Chipotle disaster, I don't see them surviving. The CEO is selling. There's no buying. No buying. Okay. Back to our calculation. We're going to take this and we're going to divide it by 96,620,000. This is saying a $30 stock price, which it is at 22 now. Target price is 24. Oppenheimer has 34, higher than mine. But again, these margins are just not attractive. Not attractive one bit. Insiders are selling all they can, it seems like. Institutions own 77%. That is old data. We're going to see what the new data says. I'm hesitant on this one. The stock went from 882 to 25. That is about a 200% increase. And it has come back a little bit. So I think I want to see a bigger pullback here. But I mean, a company, they're not even profitable. Their gross margins are 7%. That's tough. Institutions own 77%. Money flow, where's their money flow? Money flow says all-time high, 85%. So that's about an increase of 8%. It is not all-time high ownership. We can see right here, this was all-time high. So Vanguard owns 8.3 million. BlackRock owns 7 million. Price T. Rowe Associates sold 7 million, it looks like. Or they sold quite a bit. No big noticeable changes overall. Yeah. So, although I am a fan of their offerings, of their menu. It's obviously healthier, um, it appears healthier. I just can't get behind the stock right now. And that is just mainly due to 7% margins. And the stock has only been around for 2 years, 3 years. I mean, the company's probably been around a lot longer. Let's just see. It's been around for 20, nope, 18 years. So they survived the Great Lockdown, the COVID. Um, they survived. Um, However, I don't know. Sweetgreens, 7% margins. Ooh, I don't know. I can't find a situation. If this company has had a stock that's been trading for 20 years and it had that stock history, it might be a different story because then you could see historical cyclical patterns. But this company came right after COVID, and I couldn't imagine what the stock would have done during COVID, like 2019, 2020. I mean, obviously down here we have it, they took a hit. They took a hit, but um, yeah, just gross margins being 7%, not profitable. Are they getting towards profitability? That's a good question. Thank you for asking. Kind of. Yeah, 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 yeah. I want I want to say yes. I think they could become profitable in 3 years, 2027. Um, so I think a pullback maybe to this $10 range, then I could consider maybe a small position. But there are other restaurants I like than this. I mean, the menu I like, but I mean the margins I don't like, the unprofitability I don't like, the insiders just selling hand over fist I don't like. So, yeah. I mean, sales over the past 5 years, positive, EPS negative, but you also have to bake in that was during the COVID. So yeah, I'm a little torn on this one. I can't really. I don't. I want to see this come down. I want to see this come down. If it takes off, good for them. But 7% margins. I mean, you're better. I mean, I don't know. I'm not a financial advisor, so opinion only. Sweetgreen, I will check back in on you. Let's see if I can. We're just gonna draw some squiggles. Okay, just doing some squigs. I'll check back in about 4 months. I do want to add an alert on this. Actually, let's just create an alert. Where alert? Create alert. My head's covering it up. Sorry. Okay, so we're gonna create an alert under 15. Price below 15. Dot 00. Okay. Alert. Do you wish to proceed to alerts? Close. Okay, great. So that's Sweetgreens. If you made it this far, consider subscribing. Let me know what your thoughts are on this. There is a really actually I just connected, not I didn't connect. I subscribed to a YouTuber who only looks at restaurant stocks. And I'm interested to see what he has to say about this one. I think our opinions will differ a little bit because I'm looking more so at the technical analysis and the gross margin, whereas I think this guy or girl, this person is looking at the bigger picture. And I think that financial data he looks at is beyond what I have here. So I put his YouTube up so you can see it. But again, thank you so much for watching. Have a great day. And if you're in this one, good luck. Adios.